All right. Back in the game again here tonight. Back to work tonight, Tuesday evening after all. It's August the 4th, 2020. My name is Joseph, by the way. And as always, welcome back to your nightly newsletter. Now, if you're here for the first time tonight, it's great to have you with me because my job tonight is very simple. My job tonight is to help us find the best entry setups for tomorrow's trading session. And I got a great video in store for you guys and gals tonight. A lot of great setups we're tracking for Wednesday's trading session. Got the charts already in the background. As you can see, we got the oil, got the gold, and of course we got the E-minis on our radar. Bunch of big spikes, right? Strong bull moves here. Some I want to trade, some I want to fade. How do you know which of these big bull breaks going higher? Which ones do we buy? Which ones do we sell? I'm going to talk more details on that in tonight's video. Before we jump in though, I always want to make sure to remind you guys, make sure you subscribe to our YouTube channel. That way you never miss all the good stuff we publish on this nightly newsletter. Don't forget, any questions, drop those questions in the comments section below. And as always, if you tune in every evening to watch this video, if you're like me and you rely on this video to get your mind right and get those charts right for tomorrow, hit that thumbs up button for me. I always appreciate you guys and gals tuning in every evening. So subscribe, type those questions in, and thumbs up if you like the content here tonight. But let's not waste any more time. Let's jump into tonight's video. Let's start off with the calendar for tomorrow. We get some big news coming at us tomorrow, some big stuff on the calendar. Let's grab that checklist. Let's grab that website, and let's get this party going here. Checking out the Econo Day calendar here for tomorrow. Tomorrow, of course, is Wednesday, August the 5th. Now, of course, tomorrow is it's a busy day. Tomorrow is a busy day. By the end of the day tomorrow, we'll start to shift our focus into the employment number on Friday. Now, looking at the schedule here this week, we talked about this last night. We know we have earnings season, right? So be aware before the open, after the close, some pretty big names, not as big as the names we saw last week, but definitely some big earnings reports coming out pre-market and after the closing bell. So make sure you're aware of that if you're trading in Asia overnight or if you're trading in London before the U.S. session opens. So earnings before and after the markets open and close. We're also watching closely for more updates on stimulus. Boy, it's been a back and forth day today. We've heard from both sides of the aisle. First, the stimulus talks are going well, then they're not going so well, and back and forth. So it does appear, and we've had a couple folks in the media say don't expect a deal this week. We saw some folks say it could be weeks before they agree on a stimulus package. We heard from the U.S. President Trump a few moments ago talking about the fact that they're investigating some executive orders for possible stimulus. So the ball is completely up in the air right now as far as these stimulus packages. It does sound like the U.S. President Trump wants to make something happen, so hopefully they can get something going on. The markets are definitely interested in that. That is a big unknown for tomorrow. We've also got that tropical storm. What is it? Isaiana? I can't recall what exactly the name of it is. It did hit landfall today. It doesn't look like the trajectory of the storm doesn't look like that's going to have any impact on the oil, right? The oil industry. Of course, oil is big in the southeast of the United States. If you look at the kind of trajectory, right, of the hurricane right now, it's kind of going up the coast like that, right? So it's a little bit tough to. I think people saw the word hurricane and I think they bought the oil this morning. I think that's what led to that big push higher here. It doesn't look like that should affect oil too much, but hey, we always know anytime we hear about a hurricane or a tropical storm, we know that's going to have an impact on oils. That's something we're tracking here this week. I wouldn't expect a lot more out of that. It's kind of heading over land right now. It should start to lose its strength. And again, all the major oil stuff is down here, right? It's all in the southeastern portion. So, with that storm going up the northeast, it doesn't really impact what people, I think, are assuming that will have the impact on it. So it's tough to tell how much that tropical storm, no, not a hurricane anymore, but tropical storm has an effect on that. But in the future, anytime we do start hearing about tropical storms and hurricanes, oil does tend to perk up a little bit. And I don't think people checked the map today before they went out and hit the bid on oil. We'll grab a look at that in a moment. So those are kind of the big kind of overarching items here, right? Earnings here this week, stimulus talks. I mean, we have to think stimulus is probably the biggest news on everyone's radar this week. I don't think that tropical storm's going to have too big of an impact any longer as well. And then, as I mentioned last night on the newsletter, right, we also know as well that by the end of the day tomorrow, we'll start looking at the employment number on Friday. In fact, we just heard from a tweet from the U.S. President Trump talking about how he expected a big jobs number on Friday. So it sounds like he might be baiting us a little bit here, right? And that may lead these markets into being a little more bullish, a little more bullish than they were here this afternoon. We'll check the charts in a moment. So we know that is the big news as we go into the end of the week, but we're not there yet. We've got to make it through tomorrow. Tomorrow is hump day. We got a bunch of news coming out tomorrow. The big news of the day tomorrow is that ISM non-manufacturing index at 10 o'clock Eastern time. We saw a really nice, strong 54, 55 reading on the ISM manufacturing index. Will we see the non-manufacturing index, right? Anything above 50 is growth. So we'll see if that number comes out tomorrow. That is the big news of the morning tomorrow. And so because of that, like I've said a lot lately, we have been seeing some of the best setups in our trade room between that 10 o'clock to 11 o'clock hour. So if you could only be at your desk for an hour tomorrow, that 10 o'clock to 11 o'clock block would definitely be something I would recommend. We, of course, will be in our trade room like we are every morning at 8 o'clock Eastern time, right? We'll have a front row seat for that news. And that's not the only news tomorrow. We get the ADP employment report at 8:15. That sounds like a pretty big number. It's not going to, it usually doesn't have much of an impact on the markets. That international trade number at 8:30 will probably have more of an acute impact on the markets. Honestly, I don't think these two news reports are going to be too big of any market-moving events. I do see the big meat and potatoes tomorrow, though, in that 10 o'clock to 11 o'clock hour. Don't forget also, too, the petroleum status report, the weekly inventory report is coming out tomorrow at 10:30 Eastern time. Now, you know me. Well, maybe you're here for the first time right now, or this is your first Wednesday we're talking about. My strategy, as always, is to sit on hands around that news report from 10:15 to 10:40. That is my window where I'm kind of our lockdown period there for oil trading. Keep in mind, this is only if you are trading oil like we do in our trade room. So we get that news coming out at 10:30. The market does tend to slow down as about 10:15. Again, only on oil. This will not affect the rest of our favorite markets, the S&P, right, the NASDAQ, of course, the gold. This will not affect those markets. But we do want to be aware of that tomorrow. 10:15 to 10:40 is the blackout period on the oil. We'll want to get there early tomorrow, right? Get those trades early. And I've got a couple setups I think you might be interested here to get those trades, possibly selling short tomorrow here on the oil. So we'll grab that on the charts here in just a moment. So lot to cover here, right? Lot to cover between earnings and stimulus and tropical storms, right? Again, big news tomorrow at 10 o'clock Eastern time. And don't forget, a lot going on right now. It's a lot easier to do it with me. I would always encourage you guys, the best way to come out and do this is to join me every morning in our trade room. We open up every morning at 8 o'clock Eastern time, Monday through Friday. I'll put all the information you need. I'll put the registration information in the description of this YouTube video, so make sure you grab that link in the description and get registered for tomorrow morning's trade room. All right, let's keep this party going, though. Enough of the introduction here. Calendar is out of the way. We know tomorrow what our schedule looks like. Let's grab some charts. We got some S&P. We got some crude oil. And, of course, we got the gold, the yellow metal. Boy, gold on a rip going higher there. Man, oh, man, do they let that sucker rip here. Big, strong spike on gold. I've got probably 5 different patterns on gold, 5 different setups I could imagine here setting up on gold. That's a lot. I know it's a lot, but I want to kind of go over those with you guys in detail. The oil market right now, oil is, if you're a client of mine, oil is boxed in. Oil is boxed in right now. We'll talk about what that means in a moment here as well, because it looks like those oil buyers have their work cut out for them tomorrow. I'm gonna grab that here in a second. But let's jump over to the S&P though. Let's get this S&P opened up. because S&P is a pretty interesting situation here today. If someone was to ask me what happened today on the S&P, I would say, well, we had that range from last night. We saw this in last night's newsletter. And if you recall, right, the idea behind this is a bull market, of course, into a range, was to buy below the range using a seller failure. So everything pretty much worked as planned. But do you remember what happened? Remember this last night? We talked about this last night, right? Bull market into a trading range. I talked about buying underneath the range with a seller failure. But then I talked about two breakout patterns. Remember those breakout patterns? There was two of them, right? One of them was the 1, 2, 3 breakout into that hidden channel pullback, right? I know you're probably hearing that in your sleep right now. We talked about that in a lot of detail last night. And then the second one was that strong 2-try breakout, right? That 2-try breakout pattern with a little trap off that low. Remember those two breakout patterns, right? A 1, 2, 3 breakout and a 2-try breakout pattern. Well, guess what? We didn't get those, right? We definitely got the first one. We got the one off the low. We got the seller failure. But now I'm wondering, will we get that follow through? And that's really kind of the nuts and bolts of where we are here right now on the S&P, right? The buyers got their chance to buy low. They got a little bit of a confidence check there this afternoon, and then of course running back higher here. You'll notice though, we're finishing up the session here very, very strong. It is a very strong move higher. Anytime I see a strong move like that, I always know you're going to probably see at the very least a retest of the high. And of course, the very most, possibly a measured move. So we do anticipate buyers are here, and especially, we just heard from the U.S. President Trump about a positive jobs number coming out on Friday. So I would imagine if we continue to hear good news about stimulus talks, again, they did a pretty good job at throwing cold water on those stimulus talks this afternoon. Hopefully they'll figure this stuff out here this week and we can all get back to, just kind of get that off our plate and get moving here. But we definitely know we are bullish right now. There's definitely no question about that. My biggest problem, I think, at this point is I'm right at the high of day. Right, I'm right at the high, which is a big deal if the market starts off higher, comes back now, right? The high of day is a big deal when it does something like this, right? The high of day on gold right now is not a big deal, you know what I mean? If you're pushing higher like that, the high of day, who cares, right? But if you get a really deep pullback now when you go back, now that high of day is a big deal. So the high of day isn't always a big deal, but it is in this situation. A market like gold right now, nobody, the high of day, who cares, right? The high of day is just an arbitrary number right now. It doesn't matter, right? So gold is definitely an example of that. On the S&P, though, it is a big deal. And of course, you can see by when I zoomed out, we're kind of stuck at the top of this little triangle, right? And if you've been watching our newsletter, these are really powerful, right? These triangles, expanding triangles, right? So this is definitely this is a difficult spot to want to be a buyer. We have a lot of momentum. We definitely have, I think, a lot of the headlines and the newspapers on our side right now. So it definitely, we're seeing good news data. Hopefully they don't throw too much cold water on these stimulus talks here. And you can definitely tell, right, the bulls have it. So I've got some targets overhead. I think the pendulum swing is probably the most likely objective, at least unless we see a breakout. So that pendulum swing at 33.07. So if we don't get, for example, a 1, 2, 3 breakout into a hidden channel pullback, right? That's one pattern I'm watching for, right? We talked about this last night. This is kind of piggybacking on last night's newsletter. Or we may see a strong move up, a shallow pullback, right? A higher high and a trap low. Those patterns are still very much on the table right now here for the S&P. So if I hit it my way, we'd get that nice strong breakout, either with a 2-try breakout or a 1, 2, 3 breakout pattern, right, that I talked about in last night's newsletter. And remember, too, like I mentioned last night, I cover all of those breakout patterns and failed breakout patterns in our free trading classes. So if you haven't done so already, make sure you grab that free course. That link just popped up there in the upper right-hand corner. Pause the video if you want to, right? Make sure you grab that free course, though, to learn all about my favorite favorite breakouts, my favorite failed breakouts, how to use all these patterns I'm talking about tonight. So grab that free course linked up in the upper right-hand corner. And again, I'll put all of the important links for you guys in the description of this YouTube video as well, right? I'll also put a big button in the blog there. But what if we don't get that breakout, right? How could I buy this thing? What if the market kind of keeps on grinding higher here? Is there any easy way? Is there any easy way for me to buy this thing right now? There really isn't. There really isn't, because of where we are, right? We're right up around the highs. We're at the round number. We get a measured move right overhead. So I think the best way to describe this is I'm concerned about buying high, right? That's my problem. I'm concerned about buying high. So what would be what's my favorite entry pattern if I'm worried about buying high? And you might be screaming at the computer screen right now saying traps, right? It's true. Traps are by far the most effective pattern if you want to avoid buying high. Now, there's two ways I can use a trap here. One way would be we go higher, we get that shallow pullback, right? We get that higher high and that trap below that low. If I can get that, this will be a two-try trap. It wouldn't necessarily be a breakout, right, in that sense, because of where we are. When I talk about breakout, I'm talking about strong move up, shallow pullback, higher high. But if we keep grinding higher here, right, we see that next little shallow pullback here. And again, if I can get this in before we get up to that pendulum swing, maybe we get lucky and we can use the top of that triangle, right? That as a level of support. That would be great, right? That would be great. That would be an example of how to use a trap. Another thing I would want to see here too would be if you almost imagine drawing a trend line across those lows, right across those highs. Imagine there's a channel down there. Imagine now we pull back, right, kind of down towards that range, and now we see bears trying once, bears trying twice. That's another form of a trap pattern that I like even better, to be honest with you. I like that one even better because that would go right along with, again, we have a strong move higher. The odds are very good when you see this much strength. At the very least, the odds are good. We go back to retest the high. But remember, we're at top of a range right now. So you have to kind of think, if we pull back here, you're going to see sellers trying to attack, right? And that's where that trap off that low really comes in handy, right? So again, my concern is not direction. That is not my concern. My concern right now is we are at those highs, and I'm concerned about buying too high. So a two-try trap above is one option, or that deep pullback, that one try for the bears, two try for the bears, get that trap, and up from there. Those are two patterns to look for. Again, the pullback would really be the ideal because that's going to allow me to really kind of rope in some of those sellers, and then I can leave that big runner up around that pendulum swing, right, as we go. All right, so those are kind of what I'm looking for here to be a buyer on this, either a breakout or a trap on the way higher. I should also mention too that if we were to end up back inside that range a little bit, and we end up back on the other side of that triangle, I would also be looking to buy there too. So, this would probably happen late in the day tomorrow. But if we can get this move going lower here, poke its head lower, we should be able to get another one of those same kind of seller failure patterns that we talked about in last night's newsletter. Same idea, right? Wait for this again. Wait for the market to get back into the range here. Okay. If it goes sideways, that will absorb momentum. At that point, I can wait for that push lower. I can look for sellers to sell off the pullback, and I can buy right into those stop losses with a seller failure pattern. But I should also warn you, if the market just collapses and runs all the way back down, now that momentum is a big deal. Now momentum is too strong. I can't be that aggressive. So in that situation, I'm looking for one try for the bears, two try for the bears, and then I can buy back up. Does that make sense why, right? Does it make sense why that would be the case there, right? The reason why is because if I go back into that range and sit there for a while, that absorbs momentum. When I break lower, the bears don't have a lot of wind at their back. I can be a pretty aggressive buyer buying into a seller failure pattern, right? You're going to wait for those bears to come in and sell the pullback and literally buy into those stop losses. If the market slices through it, what happens? We now have a very strong move. Anytime we see a strong move in one direction, we expect to see another leg, right? So that's why you'd think if it really slices right through that range, for all we know, we're going to be heading back down to that low here. If it slices the range, though, now it's one try, right? Now it's moving average comes down, one try for the bears, two try for the bears. One of my favorite setups is drawing that trend line, right, and buying off of that, right, buying off of that trend line. Or, right, if it slices down, one try for the bears, two try for the bears, little trap low, right? Those traps are remarkably powerful when you're using them at the lows of those trading ranges. So seller failure patterns, right, around those lows. Failure patterns are really the most powerful patterns in range-bound markets. Now, how would I sell this market? So we've talked about the buy side here. The buy side is, again, it's a little bit tricky because you got to be careful with traps up here. But how would you sell a market like this? Well, first of all, are we at a major turning point? We are, right? We're at the highs of today's trading range. So could I try to sell this thing? I could. It's going to be a little bit more on the aggressive side right now because of that strong move higher. But the best way to sell it off the high would be let the buyers try once, pull back, buyers try twice, and get that trap high. We call these crown reversal patterns, right? It's very similar to, if you recall, the trap I was talking about earlier. But remember, to be a buyer, I want to pull back, bears try once, bears try twice, and that's where that trap comes from, right? Look closely at this pattern. The reversal pattern is a little bit different, right? It's going to be a pullback, buyers try once, now lower low, and then trap high above. Those are the two very different patterns here. And you'll notice the big difference is those lower lows, right? The lower lows are what really give it away in the difference there, right? So that's the first one's a buy. The second one here, this would be my sell setup. And the reason why I want to be so careful being a seller is because we're bullish. We're so bullish right now. And because of that bull momentum, I can't expect the buyers just to roll over and play dead, right? They're going to probably put up quite a fight at these highs. And that would be what I was looking for, right, to be a seller. Now, I would also say, too, if the market runs back down into that trading range again, and if we spend some time inside that range for a while, you know where those bears want to get to, right? You know where they want to get to. So I can definitely start looking for shorts above the high of that trading range, using, of course, those classic failure patterns, right? Look for that bull breakout higher. Again, this will all be after we sit inside that range for a while, right? Buyers go up. Buyers try to buy the pullback. Where do they fail? That's where I want to be selling, right? I want to be selling back down in. And then I'll be honest, if we get enough momentum with a 1, 2, 3 reversal, again, this will have to be very much, will be depending on how this move looks. But if we see a 1, 2, 3 and a complete turn in this momentum, well, you know what's going to happen, right? That first pullback to the high of that hidden channel is going to be a very reliable setup. So I will be looking for that short. And again, this will have to be very much something we're watching, right, as it happens here to see if we get enough momentum coming off of that big move down, right? Because I'm not going to take that first pullback, right? That'd be a 1, 2, 3 pull, 1, 2, 3 reversal into that first channel test, right? Because the first test is the best test. And so, of course, I've covered a lot here, right, in this first chart. So we'll go over more of that tomorrow in the trade room. But right now, though, I'm trying to be a buyer on this right now, looking for traps as we go higher, looking for that nice pullback, get those bears roped in for a trap, or will we get that 1, 2, 3 breakout, right? We follow gold and make this run higher here, right, for that first try pullback. We'll see what we get tomorrow, right? Your guess is as good as mine. We are now at least ready to rock and roll here with a plan for tomorrow. Next up here, how about some oil? Boy, oil is a tough one here. Oil is basically what I would call boxed in. We talk about this quite a bit. We cover this in the free course. We talk about this a lot on my nightly newsletter or in the trade room. But the most important thing is you'll notice on oil is I think we can all agree oil is bullish right now. There's much confusion on that. But the reality is, I kind of joked around by saying I think people saw the word hurricane and they bought oil this morning, not really checking the darn map and seeing where that hurricane was. But and I do wonder if that will be enough to drag this thing back down tomorrow. I wonder if people will realize, oh, wait a second, the oil, there's no oil there is oil, but not the oil we're talking about, right? There's no oil in the Northeast up there, right? At least not the oil we put in cars. That's all in the Southeast here of the U.S. I do realize there's oil everywhere, obviously, especially with new technology these days and sideways drilling and fracking and all kinds of good stuff. But you get the point, though, right? So I think that's probably what happened a lot here today. It just kind of shot right higher here. Got that shallow pullback. The biggest thing I see, though, is that rejection, and this is why I say we're boxed in right now, is that rejection off the high. Now, it's not just off the high, it's also off a measured move. You'll notice they went right to the measured move, they poked their head through it, right, and they came right back down in. Now, why is that significant? It's significant because whenever I see a strong move like this, what do we know? The buyers have one thing on their mind. The buyers, they want to get back to retest the high. That is mission number one, right? Get back to retest those highs. And the problem we have now is I have the measured move in my way, and I have that major high. This is that 93 top that we talked about in last night's newsletter. So what happens a lot of times you'll see a market, it'll run up to the measured move, it'll go through the measured move, but then come right back down and underneath it. And the problem is, you're bullish, right? There's no doubt about that. There's no doubt we're bullish, but here's the problem. Buyers are now going to look at this and they're going to see this as resistance, and they're not going to be able to really get a good risk-reward ratio on their trades, right? A seller failure here, these will usually collapse right back down again. So when I see this market kind of V-top off that high, but again, it's not so, it is the V-top, but more importantly, it's where that V-top happened. Unless we see another strong leg higher here, those buyers, they're going to look at this pullback and they're going to say, okay, I don't see how I can easily get back to retest the high. Right? There's a big brick, not a brick wall, right? But there's that prior high is right there, and they clearly did not hold above it. So this is when I call, this is a term I use quite a bit called being boxed in. And what that means is the buyers have really very little options right now. They've kind of painted themselves in a corner, and usually what that means is usually a reversal. Now, how do we trade this, right? How do we trade a boxed in scenario? Well, you have to first of all assume buyers are not going to give up without a fight. So what I want to see here is I want to see buyers. I really want to let the buyers kind of dig their own grave on this, because I'm going to need those buyers' stop losses to fuel this thing as it hopefully collapses, which really could easily go right back to kind of where we began the day today. Right, I would think that the 40-70, 40-80 area, kind of where the day began, is probably where these bears have on their radar, and of course that big round number. Now, I think the only variable right now is this darn hurricane. You know what I mean? If it takes a U-turn and heads south, I think this oil market gets a pretty good boost. That's kind of the only variable I see right now is this hurricane. There's an old saying, right? You can be right and still wrong about the markets. Even though the hurricane is again, probably not going to go into the place everyone's worried about, the southeast of the U.S., and disrupt the oil refineries, the shipping container. Even though it's probably not going to happen, you can still be right and be wrong. The market may still read hurricane and think, I'm not, buy. You know what I mean? So this may not get that full reversal, but this boxed in scenario it's a classic spot to be looking for a short. So there are really two patterns I'm looking for right now to be a seller. I do anticipate buyers down in this area here, so I do want to be careful to be trying to sell in that area. What I'd like to do is use that same crown reversal pattern to get short here. So I'd like to see these buyers try once, I'd like to see them try twice, and I'd like to get that trap off of that high. That would be kind of my dream come true. If I could get one try here for the buyers, get two tries here for the buyers, notice how I draw this, guys and gals, right? Lower low, right? Remember, why lower low? Because buyers want to buy low, right? Buyers want to buy low. They wait for the pullback, they buy it once. Oh, that didn't work? Okay, lower low, buy it again. If that second one doesn't blast up these highs here, right, and it may not be an exact trap, it'll go up and start crashing back down again, because you got that measured move, you got that range top, right? That's that kind of, proverbial brick wall standing between the buyers and getting what they really want, right? So that will be my kind of dream come true scenario here for tomorrow. Buyers try once, buyers try twice. And of course, that trap high. Now, they could make our job a whole lot easier if we were to pull back and run, because then that becomes a 1, 2, 3 reversal, and this becomes a very reliable setup. Mark up that low, mark up that hidden channel high, and of course, the first test is the best test to sell short off the high of that hidden channel. What do we call those, by the way? We call those 1, 2, 3 reversals into hidden channel pullbacks. Now, we may not get the pullback, right? People might get a map and realize, wait a second, this is the wrong direction. We shouldn't have bought. They might. Yeah, I'm kidding, obviously, with you guys on that. But the market may grind, right? If the market grinds lower here, then what do we do? If the market grinds lower, that's another easy one, right? Where we see that strong move down, that shallow pullback. The shallow pullback is usually the giveaway, right? That shallow pullback is usually the giveaway. As soon as they kind of fail to pull back to the moving average, trap. Look for those shorts right above the high of that swing. Where's my targets? Again, back down to retest the low, right? Back down to the open of the day today. So those are 3 buy patterns on this pullback. Now, maybe I'm wrong, right? Maybe I'm wrong about everything tonight, right? Maybe the market goes up and 1, 2, 3 breaks higher. I can grab that new channel, I can grab that low, and I can buy the first test right off of that low, right? Maybe there's an update. Maybe there's a new hurricane, right? Oh, shoot, now it's headed towards Louisiana, right? Who knows, right? Now everybody gets spooked. The market really starts to push. It jumps higher here, runs up, shallow pullback. You get it, right? Shallow pullback, higher high. Again, very strong move here, right? Very strong move. Shallow pullback, higher high, trap low as we go. All right, those are some key setups if we see some strength running higher here. I should also mention, too, if the market goes sideways, because, ranges are possible after you see a big move up like this. I will keep an eye out for a range. There is possibility this market may settle into a range here. It doesn't seem like it right now, but if we do start to see a trading range, what do we do with a range? We buy, well, it's a bull market to a range, right? This is the same idea as before. Now, it really all depends on where the range is. So, for example, if the range ends up being back here, if this creates the range, if we end up doing this now, what's going to happen? We're going to want to measure that distance, put it down here, right? Make that our support, and then that's where you want to look for the buy. Right? We talked about this last night, and we alluded to it again on the S&P, right? What do? We wait for the breakdown. We wait for these sellers, right, to try to get short, and we buy into their stop losses, right? They're called failure patterns, right? And again, these failure patterns, we see a lot of them every week. I go into a lot more detail of those failure patterns in that free trading course that's linked up in the upper right-hand corner. So make sure you grab that free course there if you haven't done so already. And again, I've got all the links you need for tomorrow's trade room down in the description of this YouTube video. So make sure you grab those there as well. Now, the big variable here for the range is the range right, a little bit lower? Do we go up and then come all the way back down? That's the big question mark right now. Do we run back up, double top, and then pull back? Now that's the range now. So if that's the range off the high, now this becomes pretty much we talked about earlier, right? We wait for that pullback one. We wait for those bears to come in and try to sell short, right? And we use that seller failure below the low of that range. So there's a little bit of nuance to that. And then obviously those breakout patterns, right? The 1, 2, 3 breakout to new highs if it goes into a range, or that 2 try trap pattern. I won't bore you guys with the details on that. But that would be really, that's, besides if this thing rips going higher here again, we really have to see another leg. The only way I could be a buyer on this right now would be if I get that range, right? A range is absolutely necessary to be a buyer here unless we don't see that rip, right? That nice proof of this leg going higher. Then I can go out and trade those 2 breakout patterns that we go from there. All right? How am I doing so far? I know that was a little bit confusing. Boxed in, right? Have you seen these boxed in before? If you have, hit that thumbs up button for me. If it's still not making sense, don't forget, drop those questions in the comments section, right? Let me know if you're grasping the idea of those buyers being boxed in right now. But in the meantime, let's wrap this puppy up here. How about some gold? We talked about that gold earlier on, right, about how the high of day right now on gold is pretty much irrelevant, right? It's like any other price on the chart here. But speaking of high of day, boy, they closed this sucker right up at those highs, right? Buyers were not taking profit, that is for sure. So if someone was to ask me what happened today, I would say, well, gold began in the range. And then for whatever reason, the market ripped, right? The market ripped. And I could list a bunch of reasons why maybe it did, but it doesn't really matter. The why this market is moving right now, we've talked about stimulus, right? Cheap money, easy money. That's going to devalue the dollar. And of course, there's a negative correlation to the dollar and the gold. So we know there is a fundamental bullishness to the market right now. It's a very strong move higher. I think the only problem I see right now is it almost went too far, too fast today. You'll notice how the moving average starts to gain slope as the move went, right? We call these climax moves, right? Or exhaustion moves, where we get these, the market is very bullish, but then it gets more bullish, right? It's almost like there's that sense of scarcity, right? There's an exhaustive move. What happens when the markets make these exhaustive moves is that your average trader, your average investor says, I can't buy up here. It's way too high. And while the moving averages have to catch up, the market oftentimes goes sideways. So that's kind of the first thing I think of when I see this market here on gold is be anticipating another one of these ranges. Be ready for that somewhere up here tomorrow as well. So that is definitely the one thing I would expect. That's something I would probably anticipate here for tomorrow. Now, if I had it my way, right? If they said, all right, Joe, what do you want tomorrow on the gold? I know exactly what I want. I want to see a deep, deep pullback, deeper the better. I would love to get those bears to try once, try twice, right? And then send it ripping back to retest the high. That will be my kind of dream come true, right? Find that seller failure off the moving average, grab that shot higher, 2 try trap, a little cherry on top before we go back up and retest the high. That would be my home run scenario for tomorrow, right? Strong move up. Again, because it was so strong and we never really got a deep pullback today, I'd really like to see a nice deep pullback, like I think all of us would right now here on the gold, right? Let us load our backpacks up with some more gold up and then keep on, right? And then keep on trucking. So that would be the ideal scenario. For me tomorrow, nice deep pullback into what I call a nested failure, right? Trap in some of those bears and then spit them out on the way higher. And then once it runs higher, keep your eyes open for those 2 try traps, right? Those little 2 try trap patterns. That's the same pattern we talk about for a breakout pattern. Those are really, really effective though before you get back up to retest those highs, right? Very, very easy setups there. Failure into a 2 try trap on that move back up to retest the high. Now, like I mentioned before, we finished off the session here with a very strong spike. And so really, when it comes to a spike, there are some really predictable patterns. First of all is a spike in channel. Spike and channel pattern, if we do see this thing start to grind higher, right? Spike and channel pattern. That's one pattern you're watching for here tomorrow. Another one is a spike in range, right? And we've talked about that quite a bit here on this newsletter this week so far. So you probably recall the best way to trade that. Another pattern, probably the trickiest out of all of them, is the flag. So strong spike up into a bear channel coming down. And then the last one, kind of the fourth and final option, would be a reversal, right? And we'll talk about what a reversal look like here in a moment. Those are, whenever you see the day end with a strong spike like that, those are the three components I'm looking for tomorrow, right? So again, the one I would expect is the range. Range is the most common. Now, how do you trade a spike in channel? You look for that pullback to the base of that channel and you buy that pullback there. It's usually a seller failure pattern or a bear trap off of that low. We already know how to trade the spike in range, right? We look for those seller failures and we buy below the range, right? That's one way we do it. Or we look for that 1, 2, 3 breakout pattern to new highs and we trade the first pullback off that new channel, right? And again, there's that 2-try breakout too. I'm not going to beat that dead horse too much, right? You guys know that pattern pretty well. How do we trade the last one though, right? On that flag. Flag patterns are a little bit tricky. What you got to remember is in a flag pattern, it's going to feel very bearish. And that's because of the bear channel, right? The bear channel will not collapse, though. It's going to be a very slow bear channel. What you want to do in flag situations is trap the sellers, basically. Wait for the market, because what's going to happen is you'll see it eventually pop higher, and bears will come in. They'll try to get short on it. And if they do, that becomes the reversal. Mark up that low, mark up that high, and you got it, right? First test is the best test. Failed flags do happen from time to time. What is more reliable, though, in this situation is to use those sellers who are selling high. They're looking for a trap. Use those stops, right, as fuel and buy into those stops. It's like a breakout pullback, but the one kind of caveat about this one is I like to see that trap above one of those highs, because that is where sellers are looking. And then once we have those stops in place, bingo, we can buy right into those stop losses. Okay, now's your chance. Grab a screenshot. Pause the video if you want to. Grab that screenshot. This is gold for tomorrow, literally and figuratively, right? So now back to our chart. Okay, the range, pretty self-explanatory. We talked about that already. Right? If we do start going sideways here, which is most expected, and again, this might be higher, it might be a little bit lower, so there is going to be some nuance to this tomorrow. We'll investigate more once we know more, looking for those seller failures. It's a breakout failure, right? Below that low, looking to be a buy with that 2-try breakout pattern, looking for that 1, 2, 3 breakout to new highs, right? So we know that stuff pretty well already. The other scenario would be, let's get rid of this channel because that channel is probably not going to be too effective here. Other scenario would be shallow pullback, right? And we're grinding higher, right? We're grinding higher. We're grinding higher. What do we do in that situation, right? We mark up these lows. We wait for those deep pullbacks. And usually what's going to happen on these is usually it'll be a seller failure pattern into a bullish pullback for that run higher, right? It's a seller failure into a bullish pullback, spike in channel pattern, right? The third one here is that flag, right? That flag. These are the tricky ones, right? Because what's going to happen is the market will start to stair step its way down. It's going to feel like, oh my goodness, maybe this market has reversed. But what does a reversal do? A reversal jumps off the moving average, right? What does a reversal do? A reversal gets below the moving average, and then they don't grind down the low. No. That's not a reversal. A reversal is a blast, right? It's a strong jump, especially if a move like this reverses. Now, if we get that reversal, good. Mark up that low, mark up that high, and short that sucker. Where are we going? Right? We're going back to that magnet, right? We're going back to that range, back to the big round number. Definitely possible, right? Definitely possible. It would surprise me. I won't lie. But hey, I mean, I don't care, right? I don't care whether I buy, sell. I don't care what I do. My job is very simple. Take good trades, right? That's all my job is. Like a baseball player, what's your job? Swing at good pitches, right? LeBron James, what's his job? Take quality shots. As a trader, my job is, right, as that popular book says, right, find the next good trade. Right, find the next good trade. So if it reverses, I mean, I don't care, right? It's up to the market to tell me what it does. If it does reverse there, now mark that low, right? Mark that high, and again, we'll find that new hidden channel. So back to what I was saying earlier, if it starts to kind of stair-step its way down here now, right, it's not a reversal until it really collapses. What's the best way to trade it? The best way to trade it is look for that prior swing, get that trap, and wait for those sellers to commit off the trap, and look for that nice strong green candle. You're going to need those bears. You're going to need those stop losses, right? The stops are sitting right above that high. You're going to need those stops to be able to fuel this thing running higher from there. All right, guys? So we know the spike in channel. We know the spike in the range. The spike in range, you should know by memory by now. And we know the reversal, right? That 1, 2, 3, that strong dump down. Mark the low, mark the high, and sell short from there. Again, you know what my plan is, right? I'd like to get that nice deep pullback, that nested failure off the low. I'm anticipating a range at some point here, so we're keeping an eye on that right now. Will the market keep going, right? Will it keep on grinding? Will we find that spike in channel? Will we get that deep pullback we're waiting for here, getting that seller failure and go from there? We're all waiting on these candlesticks right now. Now, don't forget, we've covered a lot in this video tonight. Make sure you get registered and come out and trade this stuff with us every morning, Monday through Friday, 8 o'clock Eastern time. I'll put all of the membership information, the description of this YouTube video, so check that out. Get registered for tomorrow morning's trade room. That way you don't miss all the good stuff in the trade room. Don't be afraid to call me tonight if you have any questions about anything we talk about on this video, or if you want to get your act together and ready for tomorrow's trading session. Don't be afraid to use that live support tool, right? Use that live support tool. That's always there for you as well. And no matter what though, keep in touch, right? Drop some questions in the comment section below. I hope by now you've hit that thumbs up button and subscribed to our channel. If not, please do so, and make sure you come back and see us again next time, tomorrow morning, 8 o'clock Eastern time in the trade room. If I don't see you guys tomorrow, though, make sure you come back and join us tomorrow night on the next edition of our nightly newsletter. Guys and gals, my name is Joseph. As always, have a great rest of your evening. Thanks for tuning in. Please don't forget to share this information with a friend, and we'll see you guys next time. Adios, amigos. Bye-bye for now.